Let's get the countdown. All right, peace to the family. This is Brandon B. Dixon, man. We're coming a little bit late, but we're gonna go ahead and get it started real quick. With just another episode, real quick of We're Talking Real Estate. I'm gonna go ahead let everybody introduce themselves first, and then let's go ahead and get straight to it, man. We're not gonna waste any time today. CJ, you want to kick it off? Let me see if I got your banners ready.
All right.
All right, I think I got you queued up. Bam.
Cool. What's going on, everybody? CJ, the realtor broker owner of Greenwood Realty Group. Give me a follow. Let's connect on social media at CJ Sales Texas. That is CJSDLLFTX. My audio is low?
Yeah, a little bit.
All right. So yeah, give me a follow on social media, y'all. Check out the website, greenwoodrealtytx.com. We got all the information for you. If you are a seller, buyer, or an agent looking to get more information about us and what we do, go to greenwoodrealtytx.com. Of course, we have our YouTube channel at CJ the Realtor, where we're doing not just our home tours Lux edition, we're also doing some highlights with local business owners and some other features on there. A lot of good information, good game. So go on there, give me a subscribe. Give me some comments. Let me know what you think, how we can make it better too. And of course, we definitely got to give back our mentorship program, the Mansa Academy, where we teach our young men knowledge of self-improvement, and entrepreneurship. So if you want any more information, the website is themanssaacademy.org.
Gotcha. All right, Barry B. Let me see if I got you queued up. There we go.
Hey, what's going on? This is Barry Bolston. If you're looking to buy, sell, or invest in real estate in the Houston and surrounding areas, you can go to homesbybarryb.com. You can Google Homes by Barry B. I'm on all social platforms. You can call me at 832-786-1270. Give me a call. Let's talk about or email, and let's talk about your make your goals for 2024, so we can get you in a new home.
Gotcha. All right, and we got a guest. Due to the topic, we got a guest on the panel today. Alan, you want to introduce yourself real quick?
Yeah, sure. Hey, what's going on, everybody? Alan Nelson with Goosehead Insurance. So I know insurance is the topic today, so I'm the expert to help everybody out. If you're looking to shop your rates, or you have a property or about to buy a home, please contact me today, 713-324-9056. You can also give me a follow on Instagram, allen.nelson.broker.
Gotcha. All right, and you got a website, anything you want to plug?
No website. Just follow me on Instagram. I will respond.
Gotcha. All right, real quickly, let me run my real quick 2 cents. Again, it's Brandon B. Dixon, NMLS 1541210. I'm at Billionaire Loan on all social media. Please give us a like, follow, subscribe. Also, if you like the podcast, go ahead, leave us comments. And if you need the answer, if y'all want any questions answered live on air, please hit us in the comments. We'll answer it live on air. Also, you can follow me on YouTube. Is that Billionaire Loan also as well? We got Home Tours Lux with CJ and I. We got the Behind the Sauce, and I got the Power of Ownership podcast. So we got content coming out. Also, if you're ready to book me for a consultation, go to my website, www.applywithb.com. Also, if you're ready to apply for a mortgage, that's the same site. So I streamlined everything this year. You contact me anytime, 832-775-8357. Call me 24/7 as long as it's about business. And if you want to, don't forget I'm a luxury agent as well. So if you want to buy, sell, list, invest, www.brandonbdixon.com. That's the place to do it. And then last but not least, we have our investment club, COC Investment Club. That stands for Collaboration Over Competition, investmentclub.com. If you want to become part of our investment club. All right, so let's go and kick it off, man. We're not going to waste too much time. I got the wrong thing. Man, this is a hot topic, man, because I knew it was stressing everybody because when my mom called me on Monday, she lived in Louisiana, and she went from $100-something a month insurance on a house to like $700-something a month.
Wow.
So
Yeah.
next increase almost. So I went from paying like $1,200 a year to like $32. So I seen a 3 times increase. At least 2.5 times. So everybody feeling the pinch. So rates going through the roof. I want to play this first clip. Then we could go ahead and react to it. And this affects real estate in so many different facets. And we're gonna break it down to the molecule. You know how we do it. And we're gonna get into it. Let's go over this first clip first. And let's get this going. All right, cool. Can y'all see the screen?
Yeah.
All right, cool.
Losing your house, working tirelessly every day, making your payments, raising your family, paying your bills on time. All of a sudden, you're forced to sell your house. It's not because of anything you did, but because of the weather. There's thousands of people right now all across the country, and in particular, near large bodies of water, whether the Gulf of Mexico or off the oceans, that are experiencing what I call the homeowner insurance cancellation crisis. Listen to this.
For Rochelle Trotter and her family, this was more than just a home.
I literally raised them 4 boys in that house with my son.
She recently sold that home because she couldn't afford the rising insurance premium. Her monthly mortgage went up $1,200.
Like, I feel robbed because I worked so hard to get my home. For them to have the increase of the insurance is a lot because I was a single mother by myself. I fought through and I kept my house and I kept it till I couldn't keep it no more.
There's hundreds, hopefully not more, but hundreds or thousands of people who are right now experiencing the exact same situation she is.
There you have one example of what could be hundreds or thousands of people right now that are faced with some difficult situations, and it's not even their fault. Here's the story that tells it all. Thousands of Louisiana homeowners' insurance policies canceled, all due to a hurricane. Louisiana Insurance Commissioner says the crisis so far has affected 85,000 people. And whether you're closer to coast or not, it doesn't matter. If you're in the state or in that region, your insurance costs went up substantially. And it's unfortunate that Louisiana is the latest state to fall in the face of rising insurance costs. And right behind them, Florida and California homeowners have also been dealing with high property insurance premiums due to severe weather. And it's unfortunate that Louisiana is struggling and happens to be the 3rd highest homeowner insurance premium in the country. And here's something else I bet you didn't know. As of this year, this month, the average homeowner insurance cost for March, the statistics just came out. The top 5 cheapest states for home insurance happen to be Hawaii, Nevada, Vermont, New Jersey, and New Hampshire. And the most expensive, Oklahoma, Nebraska, Louisiana 3rd, Arkansas 4th, and Colorado 5th. So the crisis is real. Not only is the economy not doing well, or Main Street is feeling a pinch from all angles, now you factor in government debt, consumer debt, corporate greed, and the excuse of the climate. All reasons why people are feeling the pinch. Just thought I would share this. Here's what you guys think. Drop a comment down below. Catch you later.
Well, so we're going to go ahead and open it up, man. No particular order. Anybody want to jump in? I'll go last. I'll go last. Like I said, while I said
That's
this
crazy. $1,200 a month. That's crazy.
Yep. And now she
was in Louisiana, right? That's what it said. Yeah.
Yeah,
they just had an earthquake in Jersey, so they might have Jersey on the list next.
That's
right.
crazy.
But
I know, Alan, you've been hearing this every day, probably.
It was an article I read that California and Florida, a lot of the big name companies are pulling out of them. So that, and I don't know if y'all noticed in Houston, a lot more Florida plates driving around. They like a lot of people leaving Florida coming here just for that reason right there. So yeah, it's getting high over here, but we still have people that'll cover us. We still have companies that'll give us coverage, but I don't know if we may be next.
I know
Yeah, we definitely.
mine jumped up. I think I was paying about $1,400 and it jumped up to about 23, 22, I think.
Right.
So
I
yeah, it
was
jumped
thinking
up.
that. Yeah, that's a little bit less than 100 a month.
Hey, I'll be honest with you, Barry. If you paying 2,100 in our market, you're winning.
Yeah.
Yeah.
I'm
The
Yeah,
median average, this is in our market, is about be about 28 to like 3,500, depending on where you're at. And so, like that lady was in Louisiana. It's a high hazardous area, right? You heard about California, you heard about Florida. That's big names are pulling out. State Farm for sure. They pull all the way out of California. You can hardly ever any really right in Florida. I mean, just by how it is. I mean, these areas get hit by hurricanes, natural disasters, year after year after year. And over time, these insurance carriers, they're looking at, hey, how can I cover your property and still cover the rest of the nation, and still make and if you have a claim, I can still pay and fix your house. And so that's where we ever come into. We're in this what we call a hard market, and it all started from 2020 when the pandemic hit. People wasn't working, people didn't have any jobs, so insurance carriers, as what they look at, they like, hey, I'm gonna be the nice player. I'm not just gonna take your money. I'm not gonna seem like a scam or anything like that, right? So they admitted more people in and lowered their costs, and they did that for a few years. So by the end of 2022, and definitely for sure in 23, they were like, hey, if you haven't had a job, straight speaking, if you didn't have a job, listen, you need to find a way to insure your property, because we have to remain profitable, because these natural disasters are coming. And that's kind of where it all comes down to. It sucks for sure, especially in our market. And they look at us in the Houston market as far as being what they call that coastal, right? And that's the reason why some of the prices, premiums are up there higher, because we're kind of getting lumped into where Galveston and all that in, because ever since Harvey hit, that changed the dynamic on so many fronts in our market.
Yep.
Right. So just to get my 2 cents in there, I don't want to make it seem like we jumping on insurance all day, but I want to kind of lay it out. I want to spread awareness, and then secondly, I want to get some solutions, because we're a solutions-based podcast on how potential home buyers can prep and start planning out for this particular cost. Because, like I said, even I had a couple of people this week that I thought, all right, I put a little bit extra on there just to, just to prepare for the high rise of cost, but it was double what I thought. So the extra that I put on there was double. When the estimates came out, they were double what I thought it was going to be, and I thought that was kind of high. And like I give you example, like a house in, let's say Katy or something like that. This depends on where it's at. Just the homeowners will be like 150 to 200. I'm thinking 275, 300. Nah, some of them are, 400 or 500 now. So
a month.
Yeah, a month.
Wow.
Yeah, so they jump like that there. So, and this another thing I want to get to as well when we start getting granular about it, is that I don't think it's going to go down, because don't forget that as the price of the home increases, the insurance is going to increase, because the amount to build it, the amount to replace it, the replacement cost is going to increase.
Yep.
So as it's like a gift and a curse. We got the actual equity, but at the same time, now the insurance is going to go sky high, and then that's without claims, this without without filing anything. This is just this. You've been paying your bill on time, you just got penalized. Damn near. That's what it seems like to most people. So I want to switch this as well. Let's take it from another angle. So now it's going to affect a lot of first-time home buyers, and this home buyers period, DTI. So thought you could qualify for, you might have to take it down a notch.
Yep.
You know, because you got to consider that insurance.
Yeah. Well, let me ask you this: when you're are you taking that into account? Because the last few that buyers that I work with, they didn't ask for the homeowners until we would almost getting ready to close. They was
Right,
asking
and
for a quote.
that's what I want. That's what I got a couple of clips that talk about that as well.
Okay.
You kind of jump into, but yeah,
Okay.
I think the next couple of clips talk about that. One of the solutions is like, hey, you need to get up front.
Yep.
That's one of the things priority, like up front. You need to find the insurance up front now because if that thing double or if it's triple that particular house, you don't know, each house is different. So you really can't say per area, you really can't say, per neighborhood. You got to really get that house. And so you got to probably,
like, even in the middle of the city, certain neighborhoods won't cover. Because I had clients looking like in Spring Branch, there was one little pocket in there that insurance companies wouldn't touch.
Right.
Nowhere near water, nothing crazy about it, but it was something about that particular neighborhood.
Right. So you're gonna have to start changing the way you shop, based on insurability, of that particular property. And if you're gonna be able to afford it. So you gotta make that a priority because that could ruin your whole loan. You get down and you're thinking, you wait till the last minute to get insurance, and now you can't. Oh, we don't even cover it. So you didn't waste, your earnings, not waste your earnings money, but you wasted all that time. Trying to get this property. You had your heart set. You got everything, bills and everything, get ready to transfer, and then you can't get insured. You know what I mean? So it's a different ball game. So you got to start taking that into consideration. Anything y'all want to add? Anything else to this? Before
you have to start bringing in insurance people want to buy a consultation.
Well, or whatever area they're looking at. Hey, you need to start talking to a real estate agent. I mean, an insurance agent now.
Yeah, because especially all the people that especially the ones that want to be South Houston, south of Pearland, because the price is a little lower. Right, price is lower, but insurance is way higher. So if you don't know that, you set yourself up for disaster.
Right. So you got to start making insurance a priority because, yes, it's already, prices of the house going up.
Yep.
Taxes going up because of the houses prices going up. Everything going up.
I tell clients every year, no matter what, if you get the same premium, same rate, everything, get a new quote on your insurance and always fight your property tax, no matter what.
It's a never-ending fight, man. Let's go to that next clip real quick. Hold on a second. All right, cool.
Insurance is so high. Today, I will tell you 3 reasons why you're probably paying a high premium for your Florida homeowners insurance. Homeowners in Florida pay the highest premium in the country, nearly 3 times the national average, according to the Insurance Information Institute, an industry group. Premiums in Florida are rising fast, about 33% each year, than the typical U.S. annual increase of 9%. 6 insurance carriers have declared insolvency this year alone. Others have dropped customers or stopped writing new policies altogether. For Florida homeowners, this results in fewer home insurance companies and increased premiums. These are the 3 major reasons why you're probably paying so much for your homeowner's insurance policy: insurance fraud, roof age, and storm risk. Have you ever wondered why your Florida homeowner's insurance is so high? Today, I will tell you 3 reasons why.
Yeah, that was short and quick. I know that was Florida. I'm licensed in Florida, but I think Texas is going to be right behind because you got Louisiana they're hitting right now, and I think Texas is going to be up next because they're saying that Texas has the most claims out of the United States. Am I correct?
Yeah, it's claims all over, but we get all type of weather. We get hail, we get hurricanes, we get tornadoes. So we get it all right in our state. So there's going to be a lot of claims in our state for different reasons, for sure.
Right. Anybody want to react to that? I know it's Florida, but
didn't we just have a hailstorm a couple weeks ago, didn't we?
Yeah.
Well, yeah. I mean,
I had to get my roof replaced last year from hail.
Right. Right. So yeah, we got a little bit
Now
of
in
everything.
Florida, don't they also have to have? They got certain standards in Florida when building homes because of the risk of hurricanes. I know in Galveston too, right? They do that. They have like certain standards that they have to when they're building the home, so they don't take that into account, huh?
Yeah, it's still. I think he said, and I got if it's not on that clip, I got another clip where they say average prices of homeowners insurance in Florida is $400 to $500 a month. So if they 33% a year, you add that up.
You said $4,500 a month?
Yeah, $400 to $500 a month. Is
Oh,
the
4 to
average.
500. Oh, I thought you said 4,500. It's about to be a mass exit.
I was like 2 to 3, right?
Yeah, realistically 2 to 3.
Right.
And
theirs is like 4 to 5, right? But it's increasing 33% every year.
Yeah. So these, like on that clip that he was talking about, the 3 things that factor into home insurance. I don't know so much about the fraud. I mean, but for sure, the area where you at, your location is very important. The age of your home, that's a big deal too. And then the age of your roof. Those three factors are going to highly impact the rating when carriers start looking at trying to cover a certain area.
Right. We're gonna get into some of the things that consumers need to look for when they shop for a home. It's just not how cute it is; it's how affordable it is, and how, let's start talking about the actual feasibility of this particular home. They really got to consider that, especially when in our community we want to get the Taj Mahal off top, but if you're the tippy top of your budget and rates are just increasing, pretty soon you're gonna be outpriced. So you got to maybe start off low. Luckily, I'm glad I did. 10 years later, I'm glad I did because insurance is getting high, taxes getting high. So I'm glad I got where it was a real affordable payment instead of trying to, keep up with the Joneses. It all pays off in the end. So I'm gonna go ahead. Anybody else want to react to this clip before I go to the next one, and we can start really get into it since we got a full panel tonight.
Kelly made it.
Well, we might have to make 8 o'clock the real time. I see 8 o'clock is a little bit better for everybody, man.
Right.
At 7:30 is stretching it. Let's go to the next clip. Now,
it's okay. There's long to file insurance claims. That's why it's there. But it's there for big problems, not little ones. If you live in an area where you could be considered of a higher fire risk, don't give the insurance carrier a reason to drop you because they don't want to write insurance in that place from the beginning. They'd rather pay out a small claim and non-renew you than stay on the risk in the event of a large fire happening. So what's going on where you live. If you feel like you live in a higher fire area, you really want to be very careful about when you pull the trigger on a home insurance claim.
I want to open that one up to the expert. Is that a good strategy to kind of, not file claims on small stuff and really wait till you really need it? Is that a good strategy to save some money?
Yeah, in a sense, I wouldn't necessarily say exactly everything that he said. I don't agree with everything he said, but when it comes to filing a claim on your home insurance or your auto insurance, you be cognizant because those things do stay on your record for 5 to 7 years, and it will follow, and it does follow you, right? So if you made a claim at 123 Main Street, you lived there for 5 years, you had one claim, it could follow you to your next property that you buy, because they do look at claim history. Is this a person that has repeated claims? Because then now when you start talking about that last clip, that's when you start talking about insurance fraud. Like, are they just gaming the insurance to get money, or they actually doing something to their property. Maybe their property was just a lemon. You don't know. But you need to be cognizant, especially where your deductibles are and everything like that. That's why, like with my agency, we have our claim department. You can actually just call into our claim department to see if it's even worth putting in a claim based off of where your deductibles are and are you covered for it. Because if you just call the insurance carrier and nothing happens, it can have a $0 claim. And let's say you have 3 $0 claims, it could be that one carrier that's going to give you the most favorable premium. They're going to decline you because they look at you as a risk.
Right. So I didn't even know that. So you could just inquire, and it's called a $0 claim.
Yep. Yeah.
Wow.
So that's why I always, if you work with me as a broker, so I have no loyalty to none of the carriers. I have my loyalty to the client. So and then with my team, we can make these things happen for you.
Gotcha. So that's worth the price of admission right there for viewers that's looking. Yeah, a lot of people, their first inclination is to go straight to the actual carrier, and they recording all that stuff, and it's and I had that happen. And now that I think about it, I had that happen with auto. I would just say, hey, what would it cost me? Is it worth getting this glass replaced? And I didn't even do it. I just handled it myself because they answered my question. Next thing I know, my insurance went up $5. I went, how did that happen? So yeah, so that makes sense. So.
Oh yeah, and we gotta let the people know too. Like insurance is just like on the mortgage side when you're talking about loan officers, mortgage brokers, just like insurance agents versus insurance brokers. Brokers will shop it around for you, find you like the best deals out there instead of you having to call every person down the line. They'll check all that for you, just like on the mortgage broker side, they'll shop it around for you.
Gotcha. We had 3 about normal panelists come in. I'm gonna let them introduce themselves, and then I want to get them timed in on the conversation as well. Today, we're talking about the rise of insurance rates. We're talking about first-time home buyers affordability, or just strategies for customers to be able to afford a house. Period. Like a lot of that's kind of what you missed with the first couple of clips that we were talking about. It's noticeable. It's starting to become a major issue with qualifying and DTI, and this is something that was a passive thing. Now it has to be an active thing because of just the rates. It's been 3Xing, 5Xing, 7Xing. So Hyman, I'll start with you. Hyman, then Patrick, then Corey.
First time home buyer affordability.
Introduce yourself first.
Man. Goodness.
Professional, man.
So what?
Professional.
I hear you, man. This is Hyman Lemons with H&L Premier Realty, here to help you with your investing real estate needs, whether buy, sell, or rent. Feel free to reach out to me at any time. 832-235-0985. Now, back to affordability as far as homeowners insurance. If you're really, I know we don't like to really discuss building versus resale, but right now, if you're looking to purchase and the interest rate continue to climb where they are now, either you're going to look for a home that automatically has a new roof, or you're going to go to new construction. That is the best way to put it, because anything with a roof 10 years or older, they're going to insure it. They're going to insure it with an extremely high premium and a high deductible, and so it could throw off the DTI numbers from the lending perspective, and the whole deal goes to hell in the handbasket at that point.
Right. Patrick, you want to introduce yourself and get in just a couple of thoughts? I know, well, you partially insurance as well, so we want to talk about this, the affordability of it, period. Not just from a homeowner standpoint, but hey, my auto insurance went up $60 a month. And like I have no claim. I haven't had an accident since the 90s.
Right.
You know what I mean? So
it wasn't because of the Range Rover?
No, I mean actually it actually went up. It went up.
No, I'm just joking. But Patrick Chevalier III here. I'm a financial planner. I focus on retirement income planning, taxation, and everything that goes along with that. I didn't catch the clip So I just kind of joined in. So I really don't have a point of view on this topic as of yet. But I did my car insurance, just like Brandon earlier this year, renewed, and it went up quite a bit. And I called, and the rep said, "Hey, it's inflation." I said, "Man, I'm a financial planner. Inflation has gone down, so you got to come with a different excuse." or I'm gonna leave. And I guess that was the script that we received, right? And so, by the end of that week, I had a new carrier. And so that's pretty much what you have to do, right? If folks are trying to raise your rate, it's unfortunate, but you got to do a little extra homework, put a little bit more time in, right, to make sure everything is priced right to fit your needs. And so I think that's the best approach in regard to, trying to control and manage costs.
Gotcha. That's a good one as well. Like I said, a lot of people just, take what's given, and you got to do your due diligence and do your homework and try to find the best. Don't be afraid. I'm the same way. I'm diamond with Progressive. I've been having Progressive for a decade. I like to skip the front of the line and stuff like that. Hey, if they don't want to come with the prices, I'm gonna have to give them up.
Right.
Pretty soon, this is what it is. Corey, you want to go in on that? Linda side.
So Corey Smith, Commodore Mortgage, mortgage broker. When it comes to on the lending side, I see that when it comes to affordability of homes, it is making a major impact when it comes to people actually being able to qualify. A lot of people, especially when you talk about that class, the low affordable people, you're talking about people that don't necessarily have the financial literacy to actually put themselves in a great position. So they're already coming in with debt to begin with. Now you come in and you're talking about a little bit higher interest rates. And then now you're talking about higher insurance as well. That's going to make the actual payment go higher. Now they qualify for less. So, it's kind of squeezing the consumer from a lending standpoint, just because, you have to try to squeeze everything underneath that debt to income ratio. And a lot of people, have, champagne taste on beer budget money. So they're not going to be able to get what they want. And for those people, a lot of times they'd rather just go ahead and rent if they can't get what they want, which is just a bad financial decision. But unfortunately, that's the decision that they're making. So long story short, I'm not sure what the answer is when it comes to insurance. I do know that it's going higher and astronomically higher. But I just don't know what the answer is.
Gotcha. So while I load up this next clip, man, y'all hit the like button. I need y'all to ask some questions as well. We got a full panel. So this is like once every quarter we have a full panel. So I need y'all to ask some questions.
That's not true, man. We have been full for the past. We wasn't full last week, but ever since then we've been full for 3 weeks, man.
Gotcha. Well, full with a guest. You know what I'm saying?
Hey, look, I blame Pat because Pat been slacking.
All right, so.
Hey, y'all lucky I'm there at 8:30 tonight.
You've been sitting behind home plate at
Let's get this next clip out of the way. But y'all hit the like, y'all smash the like button, and y'all ask us some questions. We got some professionals on there that hit it from every angle, man. So we got all the help you need right here, all the help that you need right here on this panel right here, all the help that you need. So let's go ahead and hit this next one real quick. Yeah.
The market's kind of resetting. Like, we have so many decades of demand, unlike we've seen in the last 15 years. Like, when it hits 6, I think it's going to be crazy. When mortgage rates get down to a certain rate, it's just going to unleash the beast on 2 things. 1, inventory, and 2, these people are going to be buyers as well. The other part of mortgage rates are the amount of 33-year-olds in the U.S. is more than we've seen in almost 20 years. Like, we don't even understand the amount of pent-up demand. It's historic. Birth rates in 1990 spiked like massively. It's like double what it has been for the last 15 years. So we have this record amount of 33-year-olds who happen to be the beginning age of an average first-time home buyer, and 98% want to become a homeowner. Like, you're in such a good position as a real estate agent. If you can just not become impatient, stay the course, think 5 years out, build that database, and go out there and try to get to your goal. We're in the middle of this perfect storm where the market's.
All right, so is he capping or is he rapping, man? Is he capping or rapping?
Capping.
So Is it a good? I know it's all a mind frame, but is it a good spot for real estate agents right now? Is it a bunch of built up demand, or is it like we're saying to where you're gonna get a bunch of people that's gonna get priced out of the actual buying process and become renters?
I mean, it's valid if we ain't have these insurance issues. So,
Hey, we're trying not to make Alan the bad guy on the panel.
it ain't his fault, but if you think about a lot of people that want to sell don't want to sell to get back out here and buy at 7%. So they sitting, waiting for it to drop. And a lot of people waiting to buy. So it is a pent up demand, but now that demand might not be as strong because everything else is going up.
But I think he said once it hit 6%, he said when it gets to 6.
Yeah.
That and I think it will when it hits 6%, they're gonna come back out.
Yeah, but the ones
Those
that's coming
buyers
back out,
but that
about the insurance
the home price is gonna go up.
Right. Well, as soon as Barbara Cochran said that, as soon as rates hit the 5 again, you're looking at prices increasing on the houses 10%.
Right.
So it's not even out. So you're looking at 10% on the house. You're looking at 100% sometimes on the insurance. So you gotta have to taper your expectations. A lot of people we need to start grooming now. I know that's a bad word right now because of the Diddy thing. We need to start preparing.
No, he did.
No Diddy. No Diddy. Yeah. Preparing customers now for the temper their expectations because, hey, this insurance, you need to really, you really need to look at a 5-year game plan. Like if this thing increased 33%, like they're saying in Florida, every year, don't forget that they got to renew this thing every year.
Right.
And it's not like grandfathered in. It could go up. It's like rent. It could go up.
So I read an article recently that Florida was stopping what was it, flood coverage or hurricane coverage in a lot of areas. Is that true? Like, is that part of that homeowners?
That would be an Allen question.
I don't know that particular answer, but I would just, in layman term, I would say I don't think they would be able to do that. Only reason why I would say that is because it's such a high risk, and if a hurricane hits that home, you're gonna put the rebuild on the payability to that loan on the homeowner because you stop covering the hurricane. I don't think that would be a viable deal.
Right. And so with that said, it's just going to be costs are just going to continue to go up.
Well, it's going to continue into a new normal. That's what's going to happen.
Right.
That's kind of like pretty much where we are. It sucks. Trust me. I get squeezed. I'm getting squeezed too. But the best thing you need to do, like you did, like you can shop your rates every year. I've had clients that they haven't shopped their rates in 3-4 years, and then boom, all of a sudden you're saving $4,000 or $5,000 because you was at $8,000. Now we back at $3,500 where it's manageable, where it makes the most sense. So be cognizant. Get your 12-month auto policies if you can. Pay in full. That helps you out. As one less bill you have to worry about for at least a year, 6 months at minimum. But you get a good discount. Take any opportunity to take the discount that you get and hold up to them, right? So if you can pay in full, if you're able to do that because that can easily save you $300. It might not seem a lot, but where prices are now, that $300 do come in handy.
And dog, don't you got discounts like if homeowners and auto, right?
Right. So you should always look to bundle. Do not ever say, oh, I don't want to change. No, you take every discount because you can get upwards to at least 20% discount on your home just by bundling your home and auto insurance. I have 60 plus carriers that I go through. So even if you're not with the same carrier, you're still getting an agency discount because we have it all in house and then it's all being managed that way. The last thing people really want to worry about is insurance. It's nothing sexy, it's nothing glamorous about it, but you have someone that could be able to mitigate that for you because I see it every day, every day.
Man, this insurance about to make both shack up.
Hey, don't be afraid to get married. That's a discount too.
Get married just to pay the insurance.
So it is cheaper to keep her then, huh?
Hey, now for sure.
Well, back to the clip before we go off too far on a tangent. I definitely think that guy was rapping about rates moving down, pent up demand, all that good stuff. From what I understand, there's been a housing shortage and it's only growing. You real estate professionals could probably speak to that more. But yeah, I definitely think it's going to be a lot of competition in the markets. I think it should be now. And, in my opinion, the folks, when they ask me, I'm like, hey, you need to just go ahead and start getting you some equity now. And you make it, as long as the numbers work today, then you can rework those numbers later, right, in your favor. So I definitely think you should take action specifically to get ahead of those large crowds like this guy was talking about, when rates shift down half a point or a whole point.
Right. Just to put my 2 cents in real quick, I always preach about this offense, defense, and special teams. Offense being, increasing your income. Defense meaning shopping and saving, and then special teams meaning taxation. So I think the defense approach is good. Always save where you can, cut the coupons and stuff like that. However, don't forget about the offense. I still think run and gun. Alan said something that's very, very true, and we don't want to face it. It's going to become the new normal. It's going to be new normal. Think about it, a few years ago, when I first got my house, it was, less than $100, was kind of the norm. Now $200 to $300 is kind of the norm. It's not a far stretch to go $400 to $500 like it is in Florida. Be the new norm. So more liabilities, more actual bills equal. You need to make more money. So you need to get into more things. Real estate investment. You need to get a bit more investment, different businesses, and put more money in the till. Just what it is. That's just the new economy. You can't just do one thing. Thou should not live by paycheck alone. It just is. It's just what it is.
Is that the 11th commandment? Is that what that is?
That will be. That's the gospel according to B. Dix.
I think that's the 10th pimp commandment.
Thou should not live by paycheck alone, man. That's real.
And if you are a homeowner right now, don't think you could just not have insurance coverage, because that your lender will find something for you.
Right. Yeah, you don't want that. You definitely
don't want that.
You don't want that.
So, but I'll open it. Hyman and Corey, before y'all want to chime in on that, Barry? Chime in on that last clip before I go to the last couple of ones.
Cap.
Oh, you think Cap?
No,
you want to elaborate?
3-year-olds ain't ready to purchase yet. They still trying to figure out how they gonna live their life. Stop the cap.
33-years-olds. Oh,
that's what it said. You said it. 33-year-olds.
Yeah, but I mean,
the average first-time buyer's age. Stop the cap.
What's the average first-time buyer's age?
No, that's legit. It's about
depends
34 years old.
Depends on the national. Depends on the demographic.
I looked up. It's 34 years old.
Right.
Oh,
at least
34.
in the Heights. In the Heights is 34.
34, huh?
I looked it up.
They demographic.
Computer for you, CJ. Look at the 77373 zip code. 77388 zip code.
Yeah, that's different. That's different ballgame.
That's
I didn't
spring.
say Cypress. 770.
I said 77388.
388 is spring. Yeah, that's spring.
Yeah. But even so, like I said, my daughter, 26 days, she's starting to look at buying a home real soon. So, 20s and 30s. My point is that when I was talking to Hyman this weekend, we was at the site. One of the things I kept mentioning, like, don't forget that there's over 6 million illegals in Houston alone, right? And don't forget that it's a certain amount that's turning 18 every month. So there's more and more people there's more and more people, and they need somewhere to stay. They need somewhere to live.
Right.
So I think he's on point as far as the market is a built up demand, and they're just not building them fast enough.
Right.
And then I think now what he might be capping on is I think a lot of these real estate agents are not prepared. They're not prepared to do the work that it's going to take for the new normal, because it's getting harder. It's not just easy money anymore. You're going to have to really have some skills.
Yep.
You know, so I think it's not as easy as people think. You could do it. You know, it's all on mind frame, but it's going to be. I know, you know, it's 90 hours and you take a test, you get a license. Easy. I did it in 6 weeks. You know, and while working a full-time job and other stuff. You know what I mean? So it's like you said, one of the lowest bars you could get. You know what I mean? So it's not hard to get into real estate. However, it is hard to become a performer in anything that you do. So, you know, if you're a top performer, that's a different ball game. You feel what I'm saying? Corey, Barry B, you want to chime in on that? Capping or rapping?
I think he rapping, you know what I'm saying? Because I definitely think he rapping because when you think about, you know what I'm saying, the new way the new generation is making money, a lot of kids, influencers, you know what I'm saying, YouTubers and all this other stuff, you know what I'm saying, they're starting to purchase houses at a younger age. So I can definitely see, you know what I'm saying, that age average actually going down. So that I actually agree with. When it comes to the actual rates, I actually think we're going to see an influx of demand come in when we crest 6.5. So I don't even think it's going to wait until we get to 6%. I think the, you know what I'm saying, right now we're right at about 7 on the national average, right? So, you know what I'm saying, I think once you crest that 6.5 and you start to have the media hype it, oh, we're the lowest we've been in the past year, whatever the case may be. As soon as people see that article, oh, now it's time to jump in. I'm not trying to wait till it get to 6%. As soon as it crests 6.5, oh, it's the lowest it's been in a while. Oh, I need to get in now. Now is the time for me to jump in. So from that perspective, you know what I'm saying, I think he can. 6% is just going to drive a market craze, but I actually think 6.5 is going to turn everything around, and it's going to get busy for all of us.
Yeah, I think he's rapping, and you know the media is going to jump hold of it, like you said, when they get to that point. That's all you're going to start hearing on national news and all that, is that interest rate coming down, and that's what a lot of these people are waiting on. They just sitting there waiting on the interest rate to come down.
Right. The
As soon
Fed
as
already
they,
said,
as soon as they hear it on the news, bam, they're going to
3
jump.
times this year.
Huh?
Right. So it's coming.
Right. It's crazy how people are programmed though. That's crazy. So, you know, as soon as they get heads up, then they go ahead and start moving. We've been preaching this for 6 months at least, man. You better, the deals are right now. You need to go ahead and get deals and refinance, but a lot of people don't take it right. But that's why they call it the top 10, the top 1%. A lot of people don't listen. A lot of people hard here. Let's go into this next clip real quick.
Yeah, Patrick, don't we got CPI report coming tomorrow?
Tomorrow's Wednesday. Typically, yeah.
Homeowners insurance has been a hot topic of discussion lately as many insurance companies have dropped coverage in California. With insurance companies reducing coverage, protecting your investment is paramount if you're buying a home. Do the research before you close escrow, or better yet, before you remove contingencies on that new home. Consider your home's insurability and location, especially in high fire zones, which affects pricing. Get informed about homeowners insurance before you remove contingencies and before you close escrow on your new home.
All right, so we kind of jumped the gun a little bit earlier. I wanted to talk about this a little bit, but I'm glad we got the full panel now. A lot of people, just to reiterate what we were saying, I know we're touching this twice, but this is very, very important. A lot of people don't wait till the last minute to get insurance. I think the new normal, is going to change. You're going to have to start factoring that in up front.
Oh, yeah, that's going to be a part of the option period.
Yeah, so you're going to need to check insurability from the get-go, because some houses, just because it's in the neighborhood doesn't mean that particular house is insurable.
Yeah, I'm going to pause for 1 second. I think you just dropped a jewel between somebody who's good at what they do and somebody who's great. Right, because a rookie or entry-level person, if that's not the standard practice and they taught them that in school, that would mess up a lot of their deals. And I think that's the experience thing. So that was a nugget I just picked up from you. So I appreciate that.
Right. Well,
for the
that's
folks who are listening.
That's what this podcast for. I can't. That's what this is for, man.
And then on the flip side, I think it's good for a seller to do due diligence on the front end too. It's like as you're listing your homes, like, hey, this is what we just recently saw from rates, just to throw it out there.
Right. Well, this is the thing, and people don't realize this. That homeowners insurance is not. You can't transfer that. You can't transfer that over. You know, I think flood policies. Correct me if I'm wrong, Alan. Flood policies, you can.
No, you can't. You can't transfer a flood policy.
You can't transfer any policy, right?
Right. No, but with a flood policy, what you can do if you're in a high risk flood zone, so like an AE zone, and that that buyer is going to buy that home, they know it's in the flood zone. If they can provide that previous, if it's an NFIP, that's the only way to really work most of the time. So the NFIP flood like policy. If you have that policy number, that can give you a break on your flood insurance.
Right. So this is say, hey, they got it for X amount. Can I transfer that over? That's not possible.
No.
Yeah. So that's a fallacy that people, hey, well, I want to use the sellers. Nah, they grandfathered in. No such thing.
Yeah, they wouldn't have no insurance companies if that was the case.
Yeah, well, I just keep the policy from 1968 then, at that point.
Mortgage brokers, question for you. With we're saying that we want the buyers to look into the insurance in that area. Do you think y'all are going to start requiring that information from the that mortgage broker? I mean, from that insurance broker when you start working alone? So even before, not just them calling and finding out what the rate is in that area, but
no, absolutely. So when you talk about that, you know what I'm saying, now insurance has got so unpredictable that, you know what I'm saying, from the first time the contract comes in, I automatically send it to my peoples. Hey, look, I need a quote on this. Because, you know what I'm saying, if the insurance comes back where if we're close on DTI, and majority of the times I'm over conservative on insurance anyway. So it's, a lot of times I'd rather go down on insurance rather than go up. So I'm over conservative anyway. But from the jump, if we're going to have a DTI problem, I need to know that up front while we're in the option period. So as soon as I get that contract in, I'm sending out for quotes. So it has adjusted the way that I do mortgages, because it used to be something that you didn't have to worry about. Hey, look, man, I'll make sure we make it out the option period, and I get the quotes later, right? But now it's just like, look, I need to get that up front, because if we don't have a deal or if there's an issue with a DTI, we need to know that while we're in the option period to save the money.
Mm-hmm.
Exactly. And then, like I said, most people, this depends on, don't forget that each broker, this is a lot of people, this is a lot of fallacy. And I went to today actually with a meeting with Mike Cordes, and he said the most prolific thing. Just because you work for a company don't mean everybody does business the same. Nexa has 2,400 different mortgage brokers. That means it's 2,400 different LLCs. It's 2,400 different ways that people do business. So we don't all do business alike. So just because you got a person that works for Nexa, same thing as you have somebody that works for Keller Williams, that don't mean all the agents are cookie cutter. So you might have a broker that might not, like Patrick said, that might not know. It might be a passive thing. And then you wait till the last minute and you can't move because that house is insurable. So you got to get with an expert that's ahead of the curve and kind of looking for these things and that has experience in actually closing. Don't forget that. How can you tenure doesn't mean anything, and then just because you're and looks don't mean anything. It's experience. You know what I mean? So a lot of people go by looks and tenure. That don't mean anything. I could be 10 years and ain't close the deal. And you need that experience in order to have the actual the actual knowledge, because you hadn't experienced that thing. So a lot of people pick real estate agents and mortgage brokers for the wrong thing. You need to pick somebody that's going to actually get that thing as smooth as possible to the finish line without any hiccups, or at least
less headaches.
If you do have hiccups, you don't feel the hiccups.
Yep. Man, I got a question for Alan. Real quick. The flood map that we have in Matrix, is that close to what the FEMA flood map is, as far as when they identify 500-year AE and all that?
It's pretty accurate. for the most part, it is pretty accurate. But a lot of time when we run through my system, I always pull a flood determination. So sometimes I've helped a loan officer before, like they're like, hey, this is in the flood zone, like an AE zone, right? Because it was going to blow their deal. And so I ran. I said, no, the flood map changed. It's in the X zone, so they was able to close on that house. So it is pretty accurate, but sometimes whatever the data that some people might pull back, make a mortgage professional or a real estate professional pull back. But once I throw it through the system, it's 99% accurate.
Gotcha.
My issue with the flood zone situation is that elevation certificate, right? I'm gonna be honest, we have been taught coming up as agents that the elevation certificate makes a big ass difference. And when I get with someone like you, Alan, they be like, it's a 50-50 chance that it can make a difference. And that's a hell of that's like what, $500-$600 extra that you gotta risk to see if that actually works.
Yeah.
Are you guys taught that in class or in school or through training from your different brokers or whatever the case may be to say, well, elevation certificates does make a difference?
You asking me?
Yeah.
Oh, no. So elevation certificate is just basically if you, in a way, you're trying to see, hey, this is not in the flood zone. I'm a prove that this is not in this particular flood zone. A lot of times it's like when you say 50-50, if a lot of times if it's in an AE zone, it's in the AE zone. It's really nothing you can really do about it.
Does sometimes on the way the elevation is, does it mean, well, okay, it's not as a higher risk of flooding versus another property that maybe has a lower elevation?
Yeah, I mean, you're just going from like a 500 plane to a 100 plane, right? That's just basically what it is. But if you're below, you're just below the flood zone. You got to carry that insurance.
Right. So based on my experience, I've seen it doesn't alleviate you from having flood insurance, but it might affect the actual the actual rate on it. So elevation. Most of them, that's the first thing they're gonna ask for is if we golf at prices, we'll send us the elevation certificate and they'll try to write a better policy.
Hey, Alan, maybe you can speak better on this, you know what I'm saying? But from what I've heard, even if you do have an elevation certificate, it doesn't really do you much good because it doesn't make much of a difference when it comes to the actual premium. Maybe it saves you $50 or $60 or something like that, but we're not talking about $300 or $400 that it saves you according to what comes in from the elevation cert.
Yeah, like I say, it's a lot of times they use it for a dispute as far as like what zone is in. But like you say, if it is used and it is be able to change, it might be nominal dollars that it'll save you for the most part.
Right. And for those who's out there listening, Texas, especially, I think Texas, Louisiana, Florida, I think the coast really has, these flood zones from FEMA. And if your house is located in the flood zone, it's in some places mandatory for you to have flood insurance. And that could be a whole nother factor that equates for your DTI. So I've had some people had to bust out of the house because, they were in the flood zone. And that insurance was super duper high, and the DTI, went out of the roof. So you got to consider that. Yeah.
Well, let's talk about let's say Mireland. Everybody knows who's from Houston. Mireland floods damn near every other rainstorm. So since they've been raising the homes in Mireland up 3 feet, are they still considered to have flood? B, Corey, and Alan, even though they're elevated up that high?
Based on what I've seen.
Yeah. So I mean, because
if it's in that particular zone, it's in the AE zone, even though they built it up, they want you to build it so that way you won't incur so much loss. That's the reason why they wanted to build it up. Right. But if you're still in the AE zone, you're still going to be required.
Right.
Yeah, that's on the bayou right there. So yeah.
Yes.
Yeah, man. That's
from that back-to-back flood, that back-to-back flood that they had a few years ago. Yeah, it is. It's always going to be required over there.
That's messed up.
Right.
Them folks put all that money raiding them houses up over there. I think they're gonna do something. They did it. Dilly squat.
Well, it's stopping.
Well, I mean, you know what I'm saying? It's still valuable because you know what I'm saying you're not going to
minimize
flood,
the loss.
But
Right,
dog,
minimize
to
the
raise,
loss.
to raise your house 3 feet, though, to raise your house 3 feet, you're looking at about 20, 30,000.
Yeah.
Minimum.
Hey, but the city
If
put
not
in
more
on
than
that too,
that.
though.
Huh?
The city gave them money for that too. They didn't just
Some of
pay
the
all of
worst
that out of
thing-
pocket.
One of the worst things you can do is to build your house up and you put it on like pier and beam. That'd be one of the worst things you can do from an insurance perspective if it's not like that. Like you're not like a beach house. That'd be one of the worst things you can do. Yeah. Yeah, that'd be one of the worst things. You will eliminate yourself from a lot of carriers because they do not like pier and beam. That's open because it's an open crawl space. It's open, so they look at it as risk. Everything is about risk. Somebody can come underneath there, rip a pipe, rip a cord. That's a dangerous. Now it burns the house up. Now I have to pay. The insurance carrier have to pay X amount of thousands of dollars, and now yeah. So the worst thing you can do. So like when they did that back in the day when Harvey came, they started like that program, build your house up in certain areas, and people put it on piers and beams. One of the worst things you could have done.
And they're actually building now in my hood where I'm from now. They're actually building the homes like that. They're not even raising. They're just starting them out like that.
Right.
3 feet up.
Yeah, I mean, I'm not saying that you can't get insurance because you can still get insurance. That's
But
not
then
the issue. But
you're
it's
gonna
going
get
to
hit
be
with the extra risk.
like, say for instance, Progressive might not carry a house that's on pier beams where you could have got a premium at $1,000, but ABC insurance carrier say, hey, we'll take that pier and beam house, but we're gonna charge you $300.
That's terrible, man.
Yeah, that's why this is informative, man. Like I said,
for sure,
a lot of people don't put this insurance. They think this is passive, but this is, money that you spending per month, and you got to have a strategy with this thing as well. Like, a lot of people don't think about this stuff.
Is there a ratio that you guys use for insurance when you're doing your calculations? And has that increased?
Alan,
was that?
No, that's not for Alan. That's for the brokers.
Well, it's all in one pot. So, for example, FHA is 56.99 is your back end ratio. So that includes your principal, interest, tax, and insurance.
Right.
PITI. So that's all of the above, and that's insurance is like plural. That's including the flood insurance as well. Doesn't include the HOI. I mean, it's HOA, but it does include both insurances. So,
but if you only pay the flood once a year, it doesn't go into the escrow account.
It doesn't matter. It's still considered an expense that's mandatory for that.
If it's mandatory, yes.
But I thought the flood insurance, you had to pay that. There was no monthly on that.
No, it's annual. However, if it's mandatory for that particular property, it's still taken into consideration monthly.
Look, as the agent, you know what I'm saying, you guys don't think about this, but from a lender standpoint, they're going to make sure there's nothing that stands in the way of this property coming back to them. So, you know what I'm saying, if it leaves up to the actual client having to pay taxes by themselves or have to pay insurance or whatever the case may be, the lender is going to make sure, you know what I'm saying, they're covered. So we want to make sure if you're in a flood zone and we mandate that you have flood insurance, we're going to collect on that.
Right.
Man, I just had a client that had to pay the extra wind coverage up front.
Right. Yep. If it's mandatory,
wind
they're
and
going to collect.
flood, all that stuff. I've known that to happen where they pay for that before they close.
I think in
And that's
Missouri
before
as
they
well.
close, dog.
I think Missouri is it wind mandatory in Missouri, Alan?
Yes.
Well, wind is required. Period.
Well, I thought. Well, it's something in Missouri.
Below fair
So,
land.
like in Brazoria County. So if you're talking about like Brazoria County, Galveston County, a lot of carriers they won't carry wind on the home policy. So basically, it'd just be a hazard policy where they'll just cover just the structure and contents, but they won't cover the any kind of wind damage that will happen. So you will have to get a Texas windstorm policy so you can cover wind. And if you don't do that, I've had some people say, "Oh, I don't need that." I'm like, Well, either your loan gonna get called, or they're gonna put some wind and storm insurance on you, and it's gonna be higher than what you expect to do. So let's get it right from the beginning. That way you'll know exactly how much your home insurance is, because it's gonna change year after year, but it's gonna jack you up. So if you don't get that windstorm, you in Brazoria County, you got that $500 home policy, you like, oh, I'm winning. 3 months later, you go from paying $200 a month with all your escrow, now you paying $800, $900. You're like, what happened? The rest of your insurance happened. That's what happened. So, it's always best. So out there in like Brazoria County, Galveston County, winds is going to be separate for probably like 98% of the carriers. So you will have to have a Texas windstorm.
Right. I want to talk about this before I get to these last couple of clips. I want to have a segment about this. Let's talk about, and this hit me the other day with a client, because I was trying to shop and trying to get, try to make this fit to the DTI, and I'm like, hey, why they got this price? The house is only such and such. The house is only X amount of dollars. Why you got this at this? And so they thought this is the replacement cost. So even though the house is valued at such and such, nowadays to replace the exact same house, it would cost this much. So this is the minimum that you have to cover. So regardless what the house is worth, I had one that was, I give you some numbers that was, they're buying it for something, but the replacement was 8 something. So you need 8 something worth of coverage.
Yeah. In my world, we call that reinvestment risk, right? That's what we call that in my world. So it only makes sense if they consider that.
What that means, and this is where I want to dive a little bit deeper into this, what this means for the customer is that this number increases. This is an inflationary factored number. So each year when you renew, this number is going up.
Hey, B, you said the home insurance was the replacement cost was $400,000. I mean, $800,000, and the loan was $400,000.
Well, they got a great deal on the house.
Oh, okay.
So you got
I'm getting ready to say, man, double.
Because usually that would be the only reason I asked that question, because usually that's something that'd be like on the flip side, where the replacement cost would be $400,000, and the loan might have been $800,000.
That's not always the case. It's not synonymous with what you pay for the house. It's what it would cost to replace the house.
True. Yeah, if you got a good deal on that, then
they got that before. That's a steal.
So the replacement
that's not necessarily the case, because
the replacement cost was $800K.
There ain't no way it's gonna be double though.
Yeah, I'm like double.
There is
400 cannot be market value. I don't think.
Yeah, but you can't consider market value. Market value has nothing to do with that part.
Right, it doesn't have nothing to do with market value. It's, how much would that house cost right now to replace?
Yeah, they just got a good deal on the house.
I understand. That's what I'm saying.
Yeah.
So the cost of the hold on. So the cost of the house was $400K, but the replacement was $800K?
I'm approximating because I don't want to give specific detail.
So
not exactly.
Okay, the best way to say it is, if they had to build that house today,
it would be
$800. It would cost you damn near two. If it was 3,000 square feet, it cost you damn near $175 a square foot to build that same house.
Right, that's what they calculate,
and that's all it is, right? So even though you're paying $400, but to go back and build today, it's a whole different cost.
Exactly, and that's what they have to insure.
And that's norm, because we ran into that before, Corey, on the transaction.
But I want to make the audience aware of this, because this is a number that could go up, and probably will go up. Every year.
But understand that situation, you know what I'm saying, is like an abnormal situation. I mean, you know what I'm saying? I get what you're saying as far as the numbers, you know what I'm saying? But in most cases, that drastic difference, you know what I'm saying, it just, where, you know what I'm saying, the actual replacement cost for what you're actually taking a loan out for and what you're actually purchasing the property for is 100% difference.
Well,
that just doesn't happen.
That's a short sale.
Right. No, it's
That's
not
a short sale. That's exactly what it is.
Well,
but I mean, you know what I'm saying, like it may not be a short sale in a situation, but I'm just saying for a realistic situation, for the people that's watching, you know what I'm saying, for a realistic situation, you know what I'm saying, this doesn't happen often. That's all I'm saying.
Well, I'm saying that to say this, that a lot of people think that you need the insurance insurance coverage based on how much you pay for the house. That's not true.
No.
Yeah. No, that's real.
A lot of people are not aware of is how much would it cost to replace what you got right now?
Yeah, if they had to build it again from the ground up, how much?
Right, how much would it cost?
Yeah,
you know,
and
and
your house exploded, and they had to rebuild that joint.
Right, that's what they look at.
Yeah, because they're buying it at market value. They're buying it at market value. So that's the two things. So you buying it at $350,000, but realistically, to rebuild your house, it's going to cost $250,000 to rebuild. Right. So you can't. You're not. So I always tell them, I say, this not saying you can sell this for your house. Sell your house at this price. They say, hey, if your house was a total loss, it's going to cost $250,000 to rebuild.
Right,
and that's typically how they go.
But let's talk about a normal circumstance. Does this, am I right or am I wrong? Does this affect the rate? And does inflation affect this number?
Yes.
Right. So what people don't understand is they thinking this is like a life insurance policy, or they thinking this is like, this every other insurance that is going to be about the same thing every year. And I want to make them aware that, hey, this could change. And it could go up next year. It could go up quite significantly next year. And what does that mean?
Does the replacement cost affect the yearly premium, Alan?
The replacement, So that's pretty much your premium. Your replacement cost of how to rebuild your home, to replace your contents, anything around there. That's all part of that premium. But the two main bulks of it is going to be your windstorm deductible, but that's always going to be the biggest part because it's always going to carry the most weight. And then whatever your replacement cost is for your home, those are going to be the biggest numbers. If some people just like look at a quote and they have numbers by it, those two fields are going to have the biggest weight on it because that's what's going to cost to rebuild.
Right. So with that being said,
some oak trees in the backyard.
Let me. The point I want to make, and I open it up, is that when we're talking about real estate agents and loan officers, I know it's hard. They don't want to hear it, but we got to talk about a 5-year game plan. And a lot of people, especially our community, want to be at the tippy top of their budget. Don't forget this can increase. Taxes can increase. Insurance can increase. Just because they look at the bottom. Everybody, we just want our blood pressure and everything go down when we look at the bottom line. Oh, 1,500. That's what I want. But that 1,500 could be 1,800 next year, easily.
So when people talk about when we as mortgage lenders talk about fixed rate, there is a misconception where I'm saying, hey, look, this is my payment. It's going to be like this for 30 years, which the reality of the situation that it's not. The only thing we're talking about that's fixed is the principal and the interest.
Right.
That's it. Everything else, when it comes to insurance or property taxes, that could easily change on an annual basis, which is going to affect your monthly payment. So it could go up, it could go down as well too. But a lot of people think, I'm saying, hey, look, this is my payment. This is what it's going to be for 30 years, and it's not.
Exactly. And a lot of people get caught up in that. And that's another difference between a weak loan officer. Most likely, I'm going to throw them under the bus, man. Builder loan officer is not going to tell you that. The builder's not going to tell you that. They just want to get you out the door. They're not going to tell you about the taxes going to increase. And most likely when it's just on the dirt, and then they don't care about the insurance because they get the lowest premiums out there because it's brand new. They don't care. So a lot of people got in their mind, and I think it's still predatory lending. This is my opinion. I think it's still predatory lending. And the lazy loan officers, that's why they go to builders, because it's so easy. You don't have to have these crucial conversations, these tough conversations like, hey, this is going to increase, and you got to be prepared for that. And they don't tell them, they get blindsided. Another thing they don't tell them either is that, hey, you could protest these taxes every year. You don't have to go by what the county says is, a lot of people don't know that basic. You know, so I'm saying people just steadily going up. Hey, did you protest? No, I don't even know you can do that. Your loan officer tell you no, but you get what you pay for. A lot of these 1.5 is coming in as far as real estate agents. You know, these 1.5 is coming in the market. All right, you gonna get what you pay for. And we warning y'all up front. This is the most informative podcast that's out there. If you trying to buy a house, home ownership, we got the panel. We got a lot of people that's gonna help you get to the finish line and help you make an informed decision. A lot of people don't want to touch this because they're so lazy. They don't want to touch all this stuff. They don't want to have this conversation with the customer. I'm gonna tell you, hey, you need to plan this 5 years ahead of time. If you come a little bit below that.
You got to keep in mind too, a lot of realtors don't even keep in touch with their clients after the sale.
Exactly. They made their Mustang payment down to the next.
Their payment and keep going.
They in and out of there.
Right. So as long as they made that Mustang payment, they was rating on you anyway, because you know if that thing didn't go through, their license about to get cut off.
Show you right. Show you right. Show you right.
You know what I mean?
That check came in right at the right time.
I extended everything out. You know what I'm saying? You know, but that's what you get. What you pay for, man. You want that type.
We ain't even talk about they about to go up on these water bills too.
Oh, I ain't hear about that.
The city of Houston just sent something saying that water bills are going up.
Yep,
man.
I've been hearing these people on TikTok and Instagram talking about they only take showers every 6 days now, so it's gonna get even worse.
In my community, the MUD just installed new water meters. We're supposed to have a meeting with the MUD where they're gonna talk about how these water meters are gonna be examined.
The question is, why is your MUD concerned about what the city water is doing? Unless they're bringing that water in from the city.
No. I was just talking about it because I heard about it on the news about the city.
Yeah.
Well, one good thing is there's an invention that was at the Vegas the CS this year, where homes are going to start being built. There's generators that you could make water out of thin air. That you don't have to be plugged up to the city anymore.
Say what?
Oh, that's already out.
It's already out.
They got that machine down at the Ion.
Yeah, so it pulls water out the air and it pumps like 50-something gallons a day.
Oh, really?
Yeah, out of the air. So you don't have to be hooked.
It depends on what size. Yes, it depends on what size unit you get. They got different size units.
Right.
If it's $57, the average water heater is a 50-gallon water heater anyway, so that works for a house just fine. Unless you one of the big boys, you got 2 of them. But
right. So you gonna be able to. That's gonna open up. I think when the technology gets mainstream, I think it's gonna open up for people's gonna build in a lot of different places where you ain't gotta be hooked up to the city.
You know, to dig these wells around here.
Right.
Yeah.
So
digging wells, man, is expensive as all get out. You know what I mean?
Still have to have a
$200 a foot. Damn it.
But anybody, I got 2 more clips. Y'all want to dive into this granular about how this is gonna affect? I want people to talk about how you let me rephrase this to make it easy. How are you prepping your customers for these annual hits? And are you doing it in your business, or are you making it a passive thing where they can figure out on themselves? How are you prepping your customer for these potential increases? Let's reform it like that.
I mean, you had those conversations with I think last week we talked about you got to be relational with your customers and not just a transaction. You know, you got to talk to them about everything. I mean, I talk to them about everything from the bills, and also I think I talked about it before. Just because they get approved for a certain amount doesn't mean they have to get a loan at that amount, or find a home at that amount.
Right.
You gotta. I mean, you gotta let them know about everything that goes on. And like you say, some people just once we sell, once we close, buy.
Exactly.
And you got to stay with them.
Yep. Because that's all off the initial consultation. Because you should be talking about that. They changed the rule where you can even file homestead exemption ASAP. As soon as you change your driver's license.
Right.
Once you put that new address on there and get your paperwork, you can go file your homestead instead of waiting until the next year. So all those things you should be talking about off the rip.
Right. When you go to do that question on that, but you're not going to get the discount until the following year, though, correct?
No, it takes effect once they approve the application.
Okay, gotcha. Okay.
But that goes
You'll
into
get
effect
it.
next
You'll
year.
get it
because
when
you've
when
already-
you close. You'll get the discount when you close.
Nah, it'll be effective
No,
the
they
following
got
year.
they got to
Yeah, the
approve that.
following year. Yeah.
Following year. That's what I thought.
Yeah.
It's still following year. I thought it was once they approved.
You
Because
could
remember,
probably
if you've already paid.
yeah.
If you've already paid. They've already collected taxes. for
exactly.
all the way up
It's
to the
all
date you closed
yeah,
already.
it's all in arrears. You know what I'm saying? You have to have lived in the property or be living in the property by January the 1st. If you ain't living in the January the 1st, all you're doing is saving yourself headache from, you know what I'm saying, trying to remember that later when you file now. But you're not gonna get that till next year.
Well, that ain't nothing then.
Right. So
It just sounds fly. That's all it is, CJ.
Now take it to now take it to account, you know what I'm saying? That's different for VAs. For vets, you know what I'm saying, that's completely different. They're able to take advantage of that immediately.
Right.
But for majority of the population, you know what I'm saying, they gotta wait till next year.
Right. Let's hit these last two clips, man, and then let's roll on out. Last two clips. Bam.
Be aware that there is a proposal from the North Carolina Insurance Rate Bureau to Insurance Commissioner Mike Causey to raise homeowners insurance by a staggering 42.2%. That's right, at one shot, 42.2%. And if you're coastal, well, get ready, friends, because that number is 99.4%. Now, if you're thinking to yourself, Lee Brown, that's crazy. You're right, it is. And the realtors agree with you. When we know that it's a very expensive environment, our request is that you look at things incrementally and you don't just jack numbers all of a sudden out of nowhere against homeowners who may or may not be able to handle it. So what we need is a comprehensive look at what the numbers should be and also the underlying policies so that good decisions can be made on behalf of North Carolina. Now, you have until February 2nd to get your comments sent in. You can email your comments to this address, 2024homeowners@ncdoi.gov. So share this video.
I know that's North Carolina, but it could be coming our way real soon there with these increases, man.
We ain't talking about how Houston's broke right now either.
That money.
Yeah, where you think that difference is gonna come from?
Right.
So,
Real soon.
if you like that's being a realtor is more than just helping people buy and sell a house, man. You gotta be up to date, up to speed on what's going on in your city.
Right.
The water bills going up, property taxes maybe going up because the city broke, spending more than they got. So if you ain't preparing yourself or your clients for this type of stuff, then
Y'all voted these people in, man. Y'all voted these people in, and they bankrupt the city, man.
Well,
So
I think it's more than that. To this lady's point in the video, what I was thinking were that insurance companies, those are some of the biggest institutions in the world, right? And they make policy, right? They lobby those politicians and get the laws, rules in their favor for whatever it is they want to do. So I think that's going to be an uphill battle for whatever she was talking about. Right. Because it's pretty much, hey, it's what we say goes. Okay, pass the legislation. That's pretty much how that works from my experience.
I want you bring up an interesting point, Patrick. Can we talk about how, I know the stuff that's more in your wheelhouse, how they could use insurance to help counter the effect of the rise in insurance rates, like an IUL or something to that effect, where they could start, making some income or saving some income from taxation to kind of offset some of these prices.
Right. That's a really good question. I think you could have worded it a little bit better, but
I'm freestyling.
But when listening to you, it made me think about inflation adjusted.
Right.
And so lately, the last few years, especially since 2018, when I'm looking for some from intermediate to long-term tools for people to use to grow their accounts, we want something that's going to at least keep pace with inflation that can continue to grow, right? Because sometimes people will set up things in their plan and their strategy and it's fixed, but we live in a world now where it's like, hey, that fix won't get the job done 5, 6, 7, 8 years from now, right? So you really got to add a lot more of that to your mix. And so I guess that's my answer to your question is you do have to build something that's going to keep up with the cost of living, because today's dollar is not tomorrow's dollar.
Right, this is a fact. Anybody want to chime in? I got one more clip. I know this was
financial.
Right. Let's go ahead and I gotta end this. I gotta end the show on a positive note. You know what I mean? So, and I'm gonna go ahead and play this. This has nothing to do with anything, but it has everything to do with everything. So let's go ahead and run it.
5 years. That's how much time you get if you're lucky. 75 years, 75 winters, 75 springtimes, 75 summers, and 75 autumns. When you look at it like that, it's not a lot of time, is it? Don't waste them. Get your head out of the rat race and forget about the superficial things that preoccupy your existence and get back to what's important now. Right now, this very second. And I'm not saying drop everything and let the world come to a grinding halt. I'm saying that you can become a seeker. You can be loving more. You can be taking some chances. You can be living more. You can be spending more time with your family. You can be getting in touch with the part of you that lives instead of fears, the part of you that loves instead of hates. 70.
So man, they put it. I like to put something positive on there. Put it in perspective, man. Like I said, we time waits for no man. So clock says death around the corner, man. So you got to make these count. We don't got a lot of them, so what are we waiting for? What are we waiting for? Everybody, you keep kicking this home ownership thing to next year. When is next year gonna come? When is you only got so many years? Then people act like they're entitled to these years, like you promised these years. So so you gotta start making some of these. Not only for your 75, but what about your kids 75? What about your kids 75? So, that's when you start growing and start ascending as a person. You start thinking outside yourself. So ended on that note. Anybody want to comment on that before we get up out of here?
Yeah, I got a few words. Time is the great equalizer, right? Everybody on this panel, we all have the same amount of hours in a day, right? It's really up to you what you decide to do with that time, right? You can look over here and you can see that this person's winning. You look over here and you see this person is losing, but they both have the same amount of hours in the day. So you really have to focus on, what's your highest and best use of your time, and then make your decisions from there.
Gotcha. I think that's the Oprah Winfrey thing. Everybody has the same 24, so you got to maximize your 16. I think it's still on my board somewhere. I thought it was.
Right.
Maximize your 16. You got 16 hours in a day. You got to, besides your 8 hours sleep, you got to maximize those. You get 16, the same 16. Oprah got the same 16 I got.
Right.
Do something.
Right.
You know what I mean? So do something with it, man. It's not gonna get any easy. As you can see, you think it's just by staying still is gonna actually slow things down. Actually, stuff just keeps speeding up. As you can see, insurance will get higher. Everything's getting higher. It's not getting easy. The game's getting harder.